Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now guys, let's take a look at the gold market. In the first glance on the gold market, the picture looks very similar to the euro currency, but it's not quite so. So right now we see also some minor upward action. There's a reaction on some bad data in the United States and the good data in the some good rumors around the Greek debt burden. That the conversation will be today between the Tsipras and Chancellor Merkel, and so Scott also reacts on this. But if you will compare the two different pictures, the euro currency and the gold market, there is a really big difference. First of all, the trend on the euro currency has shifted bullish, and market has raised all the bearish patterns that was placed here and move above them. Second, euro currency stands very close to the overbought. The overbought on the euro currency stands, if we will apply this picture as the mirror of the euro currency, so it will be overbought will stand right here. But on the gold market, as you can see, overbought stands right here. So in fact, gold market stands in the free space of the action. And if on the intraday chart market, on the on the euro currency has confirmed the breaking and the destruction of the short-term bearish setup, the gold market is not yet. That's why on the gold market, the previous bearish setup that we have discussed is still valid. So you can see that grabbers are still in place, action is bearish, market, yes, it shows some minor retracement, but it right now looks very shy and just doesn't let us to talk about the possible reversal, something of that sort. That's why the ABCD pattern that we have discussed previously is still in place, and potentially the target stands right here. So, other words, we could say that while on the euro currency the bearish short-term setup has been broken, on the gold market the setup and the sentiment is still bearish, and it has not been broken yet, and maybe it will not be broken at all. But currently, guys, we can't take the long position based on the action that we see right now in the gold market. And all patterns are valid, trend is bearish, action is bearish, so it tells that we probably need to think about the possible taking the short position rather than going long, because we do not see yet any signs of the destruction of this bearish setup. You could take the risk and take the long position with the stop below these lows if you count that market really could form here the butterfly to the upside. We can't exclude it totally, and theoretically the major temptation of this issue is that you could place very tight stop. So in fact you could take the position almost at the point, invalidation point of this setup. That's the attractive moment in this situation. You could take the long position because you just stand very close to the invalidation point and your stop will be very small. If you will take the loss, your loss will not be very significant. But if you will be correct and the market really will start to form this butterfly, you just get the significant profit. That's the only attractive moment in this possibility of taking the bullish position. But technically, it's early to take the bullish position because market has the bearish trend, bearish downward action, and bearish patterns in place. That's why it's a bit not quite logical right now to take in the long position. Besides, on the 4-hour time frame chart, where the major difference stands between the euro and the gold market, you can take a look. Recall our triangle, and that has been broken recently to the downside. Here is the butterfly that I have just talked about. Okay, and until these lows hold, market has the chance to form this butterfly. But at the same time, market compares to the euro currency, market has not returned back inside of the channel. So you can see that market has retested this border and not right now turns to the downside and has not returned back inside of it. While on the euro currency, you could see that market has returned right back up inside of this channel that has been formed on the euro currency and even taken out of the stop already. That's the really big difference. It makes a big difference between the gold and the euro currency. And the current action absolutely doesn't promise you that it will happen. The market will return it back up. Maybe it will not happen. That's, by the way, the advantage of the bears, those of you who would like to take the short position, because you also could place very tight stop, because in fact your invalidation point is if market will return it back up inside of this channel. So when you will see that this failure, that breakout was failure, false breakout, that will clarify everything and will tell us that as this breakout was not truth, it means that market will continue to move higher and will show the opposite breakout. And it really stands very close to the current action. In fact, guys, market has reached the resistance that we have discussed yesterday, where we have said that you could take the short position here. Take a look at our chart and you will see what I'm talking about. Recall our yesterday conversation. We said that most probable area of resistance that market should test is an area between 93.96, the confluence, and retested of these lows. You can see that really has happened. This gold market has retested these lows and right now is struggling with the area, but it doesn't tell us that the market definitely will break through it and will continue to move up. And here, guys, if you're bearish, you could really not bad chance to take into short, because your place should be placed just above this top. Just above this top, maybe above this level for safety, about 12 even. In this case, if market will return it back up and will break this 12 even, that will be a very significant action, and market by this action returns it back up inside of this triangle, and that's simultaneously and automatically will confirm that the bearish setup has failed. So as bulls has the chance to place very tight stop and trying to get the position on this possible butterfly, because invalidation point of this butterfly stands right here. As bears could take the short position because stop also could be placed very tight, very close, with the possible anticipation of the downward action here. But guys, as I said, technically market has no signs and has no context for a possible taking the long position. Market not at ever sold, would not see any stretch pattern, no reversal pattern, trend bearish, price action bearish, two grabber stands in place and they hasn't been destroyed. Market stands just with a minor retracement up. So as you can see, the bullish context would not have it. That's why I think twice before taking the long position here in the current circumstances on gold market. So that's in fact all that I would like to say about the gold market. Let's see how today's conversation between the Tsipras and Merkel will impact on the gold market, what will happen. And mostly, of course, all investors are waiting for Federal Reserve meeting on the next week, on 28th, 29th of April. That could really make an impact on all markets, not just the gold market.